The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 20th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, that's something we must master each and every day. So let's begin with an empowering belief or two. How about this one? A pessimist. And I would say that in these markets that we're trading right now that we're looking at, there's a few pessimists out there. A pessimist is one who makes difficulties of his or her opportunities. An optimist, well, that's one who makes opportunities of the difficulties. How about this? Look for the best of what can be possible in every single situation, and you have the opportunity to turn any problem into a manifestation of greater good. You know, folks, opportunity is rare. And a wise man, a wise woman, will never let it pass by him or her. I say, take advantage of my free report, The Trend is Your Friend, until it changes. And take advantage of the link within that special report that provides you with the opportunity to receive my daily newsletter service for 2 weeks, absolutely free, no risk, no advance deposit, no charge to your credit card. And folks, you will receive an absolute treasure trove of information. Speaking of treasure troves, let's go take a look at the opportunities in the market right now. They are all to the downside. Katie, bar the door. You know, I believe the first time that was used was back in the late 1800s in some poem out there. And caution, folks, it means take precaution. There's trouble ahead. So I'd say Katie, bar the door is absolutely the right phrase to be using. Right now, we've got the Dow off 184 points. S&P down about 19, trading at 1609. We've got the NASDAQ trading off 37 points at 3406. Russell 2000 down 17 points out there. That looks like the leader percentage-wise to the downside. Right behind it, drafting is a New York Stock Exchange. That's down 1 6/10% off 149 points. Now, folks, there are a total of about 2,998 issues traded on the New York Stock Exchange, actively traded on the NYSE. This sell-off here, this is wide breadth. Right now, there's only 128 advancing issues out of 3,000 out there. Yeah, this is a wide breadth sell-off that you are seeing in the market. Get used to it, and get used to some pretty significant bounces as well. What are you going to do with those bounces? That's right. You're not going to buy into them. You are going to be sitting there waiting, idly patient to sell each of those bounces. And folks, I figure you can probably do it between now and September. So we've got quite some time, so just be patient if you're not on the short side. You will get the opportunities time and time again. Right now we've got gold down $80, trading at $12.93. Silver's off $1.71. That's trading at $19.90. That's on its way to $17.35-ish or so. Light sweet crude down almost 3% here. That's trading at $95.60. Platinum not doing too bad, only off 3% here. Down $43, trading at $13.80 over in Europe right now. They're also participating in this downdraft here. The FTSE is down 155 points, 2.5%. DAX is off 2 6/10%, down 215. In Asia last night, it was a bloodbath out there. You had the Hang Seng off 600 points, nearly 3%. Same thing inside the Shanghai. That was off nearly 3 percentage points, down 62 at 2181. And the Nikkei joining back in on the party now to the downside, off about 1 7/10%, down 230. Our call number is 877-927-6648. Let's begin by taking a look here at the New York Stock Exchange. New York Stock Exchange gapping down this morning and gapping down below June 6 out here. Now, it's the NYSE that gave us our, first of all of the indexes, all of the ETFs actually gave us our first sell signal. That sell signal came on that key reversal trading session on May 22nd. In order to have a key reversal session, folks, you need three things. Number one, market needs to be in an extended condition. I like to utilize, you can use expansion patterns. I like to use that relative strength, relative weakness indicator. We absolutely had that. Number two, intraday, you need to exceed the prior bars, high and low. Well, you did that on May 22nd. And number three, you need to close in the opposite direction. It did all of that on May 22nd. More importantly, if you put the weekly chart up, I'll go ahead and do that. Let me see if I got the weekly chart here handy on the NYSE. I'm sure that I do. What you'll see is not only was it a key reversal day, it was a key reversal week out there. And that was the week ended May 24th. Now, the last key reversal weeks that we've had out here, we had one back on the week of May 6, 2011. That May 6 of 2011, that took price all the way down to the bottom of the rising price channel. If you're watching this on Tiger TV, that's what you see on my screen here. Maybe you're listening on the radio or your mobile device at tfnn.mobi. Remember, this show, you get the archive on Channel 10, but even better than that, you can watch it live. You can see my charts live. Just go to the homepage of tfnn.com, and after you've signed up for my free special report, then over on the right-hand side, click on that button with the three smartphones, and you will be able to see this show streaming live to you. So that was the last key reversal that we had on a weekly basis. So we can go back a little further here, and if you think that those key reversal sessions are something to ignore out here, well, what if you had ignored the one on April 30th, 2010. That led to a nice sell-off. That went from the high out there of 77.27 down to a low in July of 63.55 out here. So the key reversal sessions on the daily basis, on the weekly basis, they most certainly were indications of things to come. Now, let's go back here to the daily indexes. Where is the New York Stock Exchange headed to? Well, it's now going to make a A to B equals CD pattern. And that A point is going to be that May 22nd high. Your B point is going to be your June 6th low. Your C point is going to be Tuesday's high out there, which was 94.12 and 88.54. That says, guess what? Comes back to April 18th. That would be your 1-to-1. That would be your 100% move of a move. Expect that to be the first place of its resting spot before it then heads all the way down to the bottom of that price channel. That'll take you in below the 8,700 area, maybe 86.75, something around that area. That's on your New York Stock Exchange. Let's go take a look at the other indexes out here. Let's go take a look at the S&P 500. Let's go see what the SPX is doing. That had formed our Gartley sell pattern, which we were waiting for. That completed really at the close, going into the close on Tuesday. Now what we have is we've got the 1-to-1. That, in this case here, that has set up your C point of your A to B equals CD down. That says that the S&P 500 will move down to the 1565 level. When it gets down there, that's about the 0.786 retracement. That may be the next stop before it takes a little bit of a timeout. But then it will get all the way back down into its April lows, April 18th, down around the 1536 range. But what's interesting is that remember this number, 1576.09. Oh, I am sure you do, because you probably got tired of me saying that was the watch number that we were on. That was the November 2007 swing point high out there. Look, you're 1-to-1, A to B equals CD, and the way that we came off that C point yesterday, we're gapping down today. That's another way of coming off of the C point out here. You know what that actually says? That says, nah, you're not going to the top of that 1576.09. You'll go down to the bottom of that November 11 swing point, and that'll take you, because the 1-to-1.272 is 1540.76, and that is just below the November 2007 swing point. So the question is, was this nothing but just a false breakout topside inside the S&P 500? Stay tuned, folks, because this is going to be a long, hot summer out here, and it is off to the races. Right right now, what the S&P is doing, it's tackling that June 6th swing point. That low out there is 1598.23. Let's switch over and take a look at the SPYs out here. Let's see what's going on inside the SPY, see what kind of volume we've got coming out of the air, out of the tires here so far this morning. Only 45 minutes of trading. Volume so far, 50 million shares. Now, that 50 million shares is going to go against 200 million shares June the 6th. So any kind of selling pressure to keep up on this, you've got volume. Now, you had expanded volume coming off of the C point yesterday out there. That never is a good thing. And now you've got gapping down, you've got volume inside this, so it should have no problem taking out the swing point. Could easily do it today. That low is 160.25. Nonetheless, no matter what we can say now is that you're coming into that swing point with volume. And that says, okay, you're going to test 160.25. That is your worst case, best, I don't know whether worst or best. That is the scenario that is unfolding here. Maybe it gets down there tomorrow. It's a Friday. If it doesn't do it today, test it on lighter volume, and we see a little bit of a bounce out here. But it is going to bust that out, and it most certainly can do it today as momentum to the downside just simply continues to unfold. It is Katie, bar the door for sure. Hey, speaking of that, did you guys watch that Chicago Blackhawk Boston Bruin hockey game? What a fun game. Now, it wasn't a fun game if you were on the side of Boston. Went to overtime, even the series up 2-2. Now, for a hockey fan like myself, I like to see things go to Game 7s out there. Nothing like a Game 7. In fact, tonight we've got one here in Florida. Miami is playing San Antonio in Game 7, so that should be pretty good. But absolutely, that was a great hockey game. In any event, let's get back to the markets out here. As long as I'm inside the ETFs, let's take a look at what we've got here. We've got the Dow. Let's take a look at the top line numbers. Let's take a look at the Dow Diamonds. Right now trading out at 148.83 inside the swing point as well from June the 6th. It has an A to B equals CD down. The 1-to-1 takes you into 146.52 out there. That's not where it's going to stop. Not a chance. The way you've exploded off of the C point, that says 144.65. It really says getting back into the swing point from April 22nd out there at 144 and a quarter. Volume so far, 2 million shares. That's going into a day that had 15 million shares. So it's got the volume coming in there. Again, that low, which it has not gotten to, is 148.31. If we go take a look at the, let's stay inside the ETFs. We can go take a look at the index as well, and I'll give you the numbers on those. Inside the Qs here this morning. Now the Qs taking on that hammer candle from June the 6th out there. Volume on that is 62 million shares. So far, you're into it today with 12 million shares, so it too has volume up there as long as it continues at this pace. The low of that hammer, 71.47. That's where we'll probably get the biggest release of information, is at the low of June 6th. Well, really, it's on all the ETFs, but really want to pay attention to the Qs here, because the Qs really on its first A to B equals CD down, not too bad. It was not that big of a retracement, only about a 40% retracement. And so 71.47, that is going to be a key area. And the volume, that's going to be the low of that June 6th swing point. That hammer candle is going to be key for us to be watching out here. That's probably where we get our first release of information on the daily charts with inside the ETFs. 877-927-6648. Dow is off 218. S&P's down 23. Goldilocks off 78 right now. Silver down $1.70. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Traditionally at 727-445-1044.
Welcome back, folks. Inside the S&P 500 right now, let me count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let me take that back. 11 advancing issues, 2 unchanged. That is some wide selling going on to the upside here inside the. And maybe we'll take a look at some of these stock charts here. EMC Corp, that's up. About 20 cents right now. Apollo Group, EMC is the ticker symbol. Apollo Group, APOL. WellPoint, WLP, that's up 54 cents. Washington Post, not sure why that is up a bit here. You've got Gannett Company, Cigna Corp. Apple is actually trading up just a bit out there. Inside the NDX 100, we've got 4 stocks to the upside here. You've got Citrix Systems, Facebook, Apple, and Checkpoint Software. That is to the upside. Leading the charge to the downside, Rand Gold Resources, percentage-wise. Wynn Resorts, Micron Technologies, Equinix, Regenerant Pharmaceuticals, Western Digital, Sears Holdings. That's inside the NASDAQ. You won't find anything green inside the Dow. The least red is, percentage-wise, is Hewlett-Packard, followed by Walmart. The big leader down here is inside the Dow. Walt Disney, percentage-wise, Intel, Boeing, United Technology, Travelers. Inside the New York Stock Exchange, I think I mentioned there, out of 3,000 stocks, you've got like about 100 that were in the green out here. Inside the New York Stock Exchange, to the upside, you've got Kingsway Financial, KFS is the ticker symbol, GameStop. You've got, Red Hat, Alcatel, Lucent out there, Acorn, Lee Enterprises, Manulife, Workday. To the downside, percentage-wise, and those were percentage-wise. To the downside, you've got Rio Alto Mining, RIOM is their ticker symbol. Another stock here, I would butcher the name, SIBANYE. Sibanye, maybe, gold. That is, you've got Hood Bay Mineral, Steelcase, Quicksilver, Petroleum Resources, Lightbox, Agnico Eagle out there, Genco Shipping. So the carnage is basically everywhere in the markets. Let's go to Peter in Sacramento, California. Peter, thanks for calling. Thanks for holding. How are you today? Do we have Peter on the line? Hello, Peter.
Yes.
Peter, thanks for holding. How are you today?
Doing good, Steve. How are you?
Excellent. Thank you so much for asking. You wanted to look at the TLT, I believe.
Yeah. Can I ask you and give you a little more detail? I actually have 3% loss in this position.
Okay.
TLT. So I don't know. I thought the bonds should go upside as the markets, the stocks go down. But is that something just weird, or what's the downside on it? That's one. And the second question I have, if you have time, should I go with the question or?
Yes, absolutely. I'm sorry. Yes, I was just waiting for you. Go right ahead.
Yeah, the second question is on the if you have a short position now on the markets on S&P, for example. Where do you know that it's turned the corner? How do you know that it's turned the corner and take a profit and wait for this bounce to happen so that you can, take some profits and not lose all of it?
Well, the way to answer first both those questions, or the question that I would ask you, because questions really are the answers, are, what's your time frame for the positions that you took? In both those positions. Let's start with if it's okay, let's start with your latter question first. The S&P 500. So it sounds to me like you are short the S&P 500 at the moment. Is that correct, or?
Yes, that's correct. Yeah.
Okay. Great. And so what would be, so when you entered that position, obviously I know you wanted to make money, but was there a time frame horizon that was on your mind, or what is your time frame horizon for trading? And let me put it to you like this: if you knew the probability was that the S&P was going to go ahead and make a decline into the 1400 area, would that prompt you, based on your entry point inside the short on the S&P 500? Would you want to treat that position as a core position that you'd want to go ahead and let it play out? You know there's going to be bounces in the market, or are you more of a day trader and you want to try to time everything? Can you help?
This is a 3 times bear position, so I would like to trade it. It's not long term.
Got it.
On the way.
Okay, so we come back. We're going to go back out to Peter. We're going to take a look at the SPXS, or whatever the 300% position you've got, and we'll take a look at TLT. Then we'll go out to Marie in Erie, Pennsylvania, and take a look at the Euro. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Money Masters Show. I'm Steve Rhodes. The Dow is off 241. S&P is off 27. We're going back out to Sacramento, California. We're taking a look at two things with Peter. Peter, by the way, which of the triple ETFs for the S&P short are you in? Is it the SPXS, or is there another one out there?
Yeah, that's the one, SPXS.
Okay. All right.
So let me. My other question was for TLT. Just don't forget it.
I won't.
That's a long-term position.
Long-term position. Okay. All right. So as we take a look at SPXS, now, the underlying instrument out here is the S&P 500, so your decisions really should be based upon what's going on inside the S&P 500, or at least the SPYs. You should watch what's going on there. What the SPXS is doing right now, it's taking on the swing point from June 6th. That swing point has 4.6 million shares. The high is 1122. You're at 1104 right now. In volume so far, only an hour of trading, Peter, and you've got 3 million shares. You're going to get a confirmed A to B equals CD up. Your first target is 1168. Your next target, 1211. The target after that is 1269. I suspect that you'll get probably up to the 1211, 1269. Remember, if the market starts trending to the downside, these triples will actually work to your advantage here. But if you're looking for the most conservative number and you want to go with that, 1168 would be it. That would be your 1-to-1 A to B equals CD. Okay?
Okay, thank you.
Okay, now on the TLT, let's go take a look at the TLT. So we're looking at bonds here, and Peter, what I want you to do, if you have not done this already, is when we get off the phone here, if you'd go to the homepage at TFNN.com and download my free special report, "The Trend is Your Friend Until It Changes," download that. I've got the 30-year Treasury up on my screen here. This is the weekly chart. And on the weekly chart, if you apply the techniques that I teach in that special report, what you'll see is that the 30-year Treasury on the weekly confirmed a change in trend, to the downside. And it did that the week of February the 8th out here. February 8th, the week before it as well, really. February the 1st out here. So I don't see, as far as where TLT can go to, because you're long bonds, you could get a bounce here. But to take a look at TLT as your long-term holding, that one I'm not. I don't see that. I can see trading it or something like that. But if you're in TLT for a long-term trade, I would the correlation that you mentioned. The market goes down, bonds go up. Trade the two separately. Just trade them separately. Sometimes that correlation is there. That correlation I would just trade the two separately. And right now, bonds are telling you, nah, I don't think so. Not from the long-term standpoint.
Okay, so would you take the loss now and get out, or wait for a bounce on TLT?
Did you have a stop in place on TLT, or no, because you really thought it's more of a long-term trade?
I don't have a stop on it.
Okay, then let's do this. Yes, I think you need to have a stop in place, and you can put that stop in place underneath today's low if you'd like. So you can put it at today's low, 110.41. Don't give it any more room out there. If it's a small loss that you've got, that's a beautiful thing. Nothing like nothing like having small losses out here. You've got the market certainly moving down big over the last 2 days. We haven't seen, as you said, that corresponding move inside bonds. You're getting a little bit of a bounce here. If I go inside the TLT. But you were talking about, so you were making the trading decision based on a long-term. Now, it's just my opinion. I don't see it from a long-term standpoint in the bonds. What we do see here in bonds here, another way that you can look at this is if you put a weekly chart up for the bonds, what have held it in place today has been the 200-period exponential moving average, and that price level is about 135.31. Let me see if I can do the same thing for you on the TLT. Let's see what shows up on the TLT as a 200-period exponential moving average for you. No, I can't do that because that's way up top. Is it a small loss that you've got? Pretty small?
About 3%.
3%. Okay. Yeah, so not too. That's damage that you can certainly live through. I would say the minimum. Don't let it. If you get it closed below today's low, 110.41, you can then. If today and yesterday's move is not going to get it to move for you, nothing will.
Oh, okay. Thank you so much, Steve. Appreciate it.
Sure. We're off about 500 points between the 2 days at least, and you're not seeing much move out here. So I don't know that bonds are the safe haven anymore. I think it's the king. I think it's the U.S. dollar. Alrighty?
Yep. Thank you.
Okay. Hey, thanks so much for calling, Peter. Let's go to Marie in Erie, Pennsylvania. Speaking of dollars, she wants to look at the Queen, at the euro out there. Hi, Marie. How are you doing this morning?
I'm doing fine. Thanks, Steve.
Excellent. You wanted to look at the euro. Tell me what you're doing, what I can help you look for.
Well, I went short the euro a couple of days ago.
Okay.
And I was looking at that day of strength on the 6th of June.
Yes.
When it powered up this last move. And I was wondering how much resistance I might hit there. Do you think that would be a point that you might want to step aside?
Well, if we take a look at the euro, so it's set up that nice Gartley sell pattern, and it's come off. So what the euro looks like it may be doing, it may be forming its next A to B equals CD down. That would be the larger move. If we go from just simply the retracement level off of the low from April 4th, which was 127.43, all the way up to the high that was put in on June the 18th out at 1.3414 out there. What the euro has done so far, it's gotten down. It's made the exact 0.382 retracement, which would have been 131.58. It's gotten down to 131.60. So you got to love that. I mean, how does it do that? So it's done its first normal thing where it should take a pause. And you're exactly right. You know, you take a look at that wide-ranging bar on June the 6th and says, okay, you could run into some resistance here. Let me go down. That's a daily chart. It looks to me like you should be able to get out of the euro at least to the 130 level, 1.30 even, which is your sweet 618 retracement on this. But the way that it's come off of this C point, if this was an A to B equals CD down, pretty explosive in 2 sessions. Just as you identified that move to the upside, you go ahead and you paste these 2 candles together, and you've got an equal or greater move than that candle on June 6th on the way down. Now, if I go take a look at the intraday charts, just to help us understand what it is actually doing out here, the euro-US dollar currency pair, it is still in its confirmed downtrend out here, and the bounce that we're taking a look at that really is going on here, nothing much to it. So, you know, I guess, Marie, your time frame on the trade as well would be what? How would you answer that?
I was doing this short term.
Short term.
Because
okay.
I'm using the EUO, which is an ultra, and you know, when you get your move, you generally take your profits. Okay.
Well, you've gotten that first move. I don't see, even on the 30-minute chart, and I can see where it is truly in the oversold territory. And you most certainly could get some type of bounce out of here. Any confirmation of that would be inside the euro. I would have to say that confirmed bounce here would probably be, I'll give you a couple of different, the most conservative approach is to take a look at the open from the 1030 bar. That open is 1.31982. If you get a close above that, then maybe it starts to get some type of retracement here. A little bit less conservative would be a close above the high from 9:30 this morning, out at 132.21 out there. I'm not seeing any bulls here yet rush in to buy the euro. I think you're in a good trade. I think you're in a real good trade, and I think that if you were to sit patient on that, or maybe a good thing to do here, this might be a great opportunity for you to just go ahead and get free shares.
Yeah, that might be the way to do it.
Because I really think that the euro here has a nice pattern set up, and the daily chart is what is a driver here, and that's really where you were focusing on that sign of strength by using that candle on June 6th out here, and the way that this has come off of this C point here. And on the daily chart, it's got quite a bit of room to run before it starts to move into a potential oversold condition out there, utilizing the relative strength indicator for that. So I think you've got more room to the downside, and a nice way to play that, a nice conservative way to play that is, if you can, is just go and get your principal back and let it ride.
Yeah, that sounds good. Can I ask you a general question?
You can ask anything you'd like.
Oh. That's not a good thing to say.
Go ahead. I don't have to answer it. You can ask it. I didn't say I would answer it, but
okay. When you see a market gap like this, whether
Yes.
it's a gap up or a gap down, it seems to me that Tom says that takes a lot of energy out of it. Have you found that to be the case?
Well, one of the things, yes, the short answer is yes, but I think when Tom is also looking at that, it's a matter of something gapping up into a retracement level, like a 0.618 or a 0.786 area. So that is one thing. But if we take a look at my preference is to really take a look at the futures market and see what's going on there, and take a look at the at the S&P futures, and because there really is no gap, right? I mean, you're basically trading nearly around the clock out here, and what we've seen is just on the S&P futures. If I pull up, let me see if it's right here. If I look at that 120-minute chart. What we have seen here is we have seen yesterday, we saw it get back last night, I should say, when the futures opened back up. We saw it get right back inside that price channel. And once it got back inside there, it said, okay, now I'm going to go visit the bottom side of that price channel. So, and that also is going to give us at least that 100% move, which gets you down to about the 1595, 1591 type level, which really we're almost there. I mean, the low so far interest session here has been, 1594. Mm-hmm. So, my opinion is that from a longer-term standpoint, and the longer-term standpoint is this, that we are in the unseasonal, unfavorable, we're in the unfavorable seasonal cycle out here. And the study that I have done says that the S&P 500 wants to travel to, I'll pull it back up on the screen here. Let me move this off of the screen. The S&P 500 will, during the next, I don't know how long it's going to take to get there, but between now and certainly the end of October, we'll see the S&P get down to at least 1470. That's really my first target, 1470 inside the S&P 500. So everything tells me that that's what the market wants to do. And yesterday's action, H.M. Gartley talked about bullish markets and bearish markets. And if we just simply come off with just this last leg here, off of the November lows, this 2 days ago was the very first Gartley sell pattern that the market gave us an opportunity. He always said sell the first Gartley pattern in a bull market and buy the first Gartley pattern in a bear market. So we were in a bull market, and I think we've got much lower to go.
Okay. What do you think about, I don't know if you mentioned it earlier, don't we have a full moon this weekend?
It's a great question. Thanks for bringing it up. We do have a full moon, and my thoughts are that I'll pull up I've got a chart out here that takes a look at the different full moons and new moons out here. This is the S&P 500. As a matter of fact, I think I've got a better one than this. Yeah, it's more updated. So here's all the full moons and new moons. So this weekend there is a full moon. The moon will also be at perigee, so it'll be like a super full moon. It'll be the brightest. It'll be the largest, and that's coming up this weekend. Now, interestingly enough here, if we take a look at coming off those same lows here in November, each full moon has been a buying opportunity. There was one on November 28th. That was a full moon lunar eclipse. That turned out to be a buying opportunity. The market pushed down intercession into that day. We had another one on December 28th. That turned out to be, the market pushed down. That turned out to be a buying opportunity. We had one on January 27th. Which was a weekend, so it turned out that the low was actually put in on January 28th. That was a buying opportunity. There was one, a full moon on February 25th. That turned out to be a buying opportunity. Same thing on March 27th. Same thing on April 25th. But that was not the case, interestingly enough, here on May 25th. On May 25th, we saw a one-hit wonder, a one-day move up, and then that was it. That was the high that was put in. So, these things can be off by a day or so. So now the question is, are we seeing a flip in the way that the markets are responding to the lunar cycles? And I don't know the answer to it, but, probability says that we could put in a low, and you could see it could be a bottom. A short-term bottom at least, but the very last full moon, that did not prove to be the case. So we've seen a change in trend, and I guess the question is, have we seen a change in the lunar trend as well? And I don't know the answer to that one, Marie, but I hope that information I just provided to you helps maybe to answer your thinking.
Thank you so much, Steve.
Hey, my pleasure.
Bye.
All right, now, folks, we've got the Dow is off 200. S&P is down 23, and we'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Getting pounded here this morning. Well, that you can pretty much look just about everywhere. Rand Gold Resources, GOLD is the ticker symbol, taking on its swing point low here from April 17th. That low is 66.51. 1.4 million shares. You gapped down this morning into it. Already 508,000 shares in a little hour and a half worth of trading. It has not. It's gotten down. It has not broken the swing. 66.40 is the low so far intraday. 66.51. So it's tested it. It's trading at 66.62, but looks like that is going to give up the ghost as well. Let's go to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing really good, Steve. Yesterday I was in front of the computer, so I was able to do a couple 4-round trips on the shorting the E-mini.
Yes.
And at the end of the day, I went short at 16.33, and I'm holding it overnight, and I keep lowering in my stops. I'm trying to figure out what to stop, and I keep rolling it down. Buy the cover at 16.18, but that's $900. I don't want to give that much away. I don't know where a good place to put that stop was if I had to go away for the day and didn't see, couldn't keep abreast of what was going on, where I should stop.
Sure. So I could give you a new one. If I pull up the 30-minute chart on my screen, right now the actual candle that's formed, it's kind of going in and out. If it ticks up one more tick, it'll be a hammer. If not, if it stays where it is, it's really nothing. What I would do is I would use the last downdraft bar, the 1030 bar, and the open of that is 1605 and a quarter. And the top of that is 1608. And I think you said you were at about, 16? What's the number you were using?
Well, right now, I've started out at 1623 overnight, and I'm down to 1618.
Okay, I think you can move that down to 1608. Because if you right now the way this is trading, if you were to get a close above the body of this bar here at 1030, that body would be 1605.25. You would get a bullish engulfing candle, and that would be on the entire ride down so far. That would be there was a bullish engulfing candle that took place at 3 o'clock this morning, and then there was one big up thrust, and then boom, it gave it right up. And that was as the markets over in Europe were opening up. So this would be the first candle. And the reason I say that would be the spot is that if, in fact, what happens here over the course of the next hour or so, we see a close below 1596.75, says it still wants to run to the downside. And I would just keep using. So for right now, based on the information you gave me, I would go ahead and be comfortable moving my stop to the either 1605.50 to 1608 and a quarter, something like that.
Good. And I want to, since there's only a couple minutes left, I want to just put in a plug for the den, the listeners that don't belong. It was invaluable yesterday afternoon, just getting the feedback from people, especially after 2 o'clock. So people that are not members of the den are going out and missing out on a great opportunity.
Well, that's great. We appreciate you participating and being a member of the den and sharing and all that. And it is a great tool. I think that any time that someone is looking to step up their game, it's really all about your peer group. And there is really no better peer group that I know of when it comes to trading than all of the folks that are inside the Tigers Den, everybody affiliated with TFNN. That includes all you listeners out there. But if you're looking to improve your trading, the Den is a great, I can't think of a better peer group to participate. So thank you for being a part of that peer group, Jim. And be safe today as you're out there. A nice trade. You've made some money, so no matter what the market does, you are in good shape.
Thanks. Have a great day.
All righty, thank you. Hey, folks, it is Terrific Thursday. That means that Basil Chapman is up next. Following Basil, we got our man Larry Pesavento, then Daryl Martin, David White, Andy Hecht, and then the Tom O'Brien Show from 4 to 6. Remember, folks, the way you do anything is absolutely the way you do everything in life. Become a pioneer of your future. Do not be a prisoner of your past. Have a great day, folks. Have a safe one, and I'll see you tomorrow morning. Take care now.